Morning, Fractal Effects team. Please make sure you read the disclosure. If you're following along with us today, make sure you're doing a demo account, as this is for educational purposes only. We are not financial advisors, and this is not financial advice. We'll jump onto the charts in a minute. So today was PPI. Tomorrow is CPI. So we're going to be avoiding any US assets. The first couple of weeks of the new year are always plagued with a lot of news. That's why most traders usually come back about mid-January. I will be taking a look at oil, and we're just keeping an eye on NAS until we actually get confirmation of any offset forex pairs. So here we have our new indicator applied on top of the spotlight indicator, and this is for the early entry model. So this creates a blue zone. So with oil, we had a downside expansion, and we had a sell model as well. So we were looking only for a sell. That is, the market went above, came back down, bounced off our blue zone, not to mention the London Fair Value Gap. We just add more confluence on top of itself. We could have taken a sell there. And that's before the New York range is even formed, or fully formed, I should say. Right there, any one of these could have been an entry. Let's check where previous day's low is at. Was this news release on this side, or that was just the opening gap? So it would have most likely went to fill in that gap, but we'll just keep it at previous day's lows. And this is another way that most people use the early entry model. If they already have targets and they see a pullback happening and all the confluence matches up with the early entry model, for example, again, a downside expansion model, once you get a bearish confirmation and a retracement, they already have a bias that we're going to push down to, at the very least, their target, which is previous day's low. Let's change that to yellow. Otherwise, they wait for confirmation, a retracement, and then an extension, and then we use the standard deviations. Check if they're turned on. So no confirmation as of yet, and for the early entry model, you would have at least secured your position, taken some off the table. Now we're getting a retracement into this fair value gap, back to the 20 EMA. Again, this is oil we're looking at on the left. We're not really interested in trading the indices or any US related assets today, being PPI, and then tomorrow as well. But we're just keeping it up. It's been a minute, so we're just taking a look at where the market's at. We are right on the 1, the 5, and the 15. So that all matches up with our confluence. So there's two zones to watch out for. We'll do some chart reading here while we wait for a confirmation. So there's two zones to watch out for when you're trading the early entry model with the blue zone indicator, sorry. So the first zone is the purple zone. And the purple zone is what reacts, or what Asia reacts off of. It can bounce, push down to take out purple zone lows. It also, usually, not every single time, but it can be the catalyst for the London reversal. Usually there's a reversal that happens during the London session. London usually either goes right into the purple zone or it bounces off of it and it becomes, again, the catalyst for the London reversal. So here we went above and over and then pushed down. And then again, blue zone is what the New York session reacts off of. You can tap it many times. But once you have a directional bias, you follow that all the way to your TP. So again, for anybody who got into on the early model, or rather I should say there's only a certain specific assets you should be trading during CPI and PPI, and that's really just oil. If you're looking at Forex, any pair that does not have the US dollar in it should be fine. We'll be playing around with what times we go live, depending on the news drop. So for this week, again, today and tomorrow, we're just going to be live at this time, 10:30. And we're following the spotlight strategy specifically. But we'll always do some market analysis and go over what the early entry model looked like. And with the early entry model, it's the same news days we avoid. FOMC, CPI, PPI, non-farm payroll. Those days are just too chaotic. The algorithm doesn't always follow any rules. So it's doing a deep retracement now, going past the 20 EMA. Let's see if it comes all the way up to the 50. There is our New York fair value gap in red. So this is an early retracement. Let's see if we bounce off of here and get that bearish confirmation. Now again, for anybody who got in on the early entry model, they've already moved their stop losses to break even. It might even have been, might even collected their 1 to 3 actually. Yeah, went 1 to 4. So they would have already been out of this trade. And for the ones that held all the way to previous day's lows, they would have moved their stop losses and taken partials. And this is why we only go for 1 to 3, risk to reward. You never know when the market's going to turn around on you. It could get that close to your TP and pull back. Doesn't mean that it's not going to come back down and follow the directional bias, but these deep retracements, they can kill a lot of profits. Always got to make sure you secure your position after 2R, move your stop losses. So that was a successful morning trade. And for anybody trading the London session or the Asia session, can we walk you through the strategy itself? That's not a coincidence. Bouncing right off of it, coming down, sweeping the purple zone. Same thing with London. London traded right into the purple zone, above and bounced off of it. And depending on where the purple zone is lined up, you can even use that as your TP as well, if it's in your directional bias. So still waiting for a confirmation here. NAS has given us a confirmation, but again, we're not looking at any of the indices today. You can see the sloppy price action, even though we have an upside expansion model. Look at all this back and forth. Swept out Asia lows, came back up. Now we got a bearish confirmation. We're not interested here. Just keeping an eye on it. During the holidays, there's a lot of traders that get antsy. They want to jump onto the charts. They want to trade every day as if it's just a regular day. But as mentioned before, the first 2 weeks of January and obviously the last 2 weeks of December are pretty much the worst price action. Doesn't mean you can't find trade setups. It's just there's a lot of things going on. So professional traders usually take those 30 days off. And even this week, price action is going to be all over the place because of this news. But it's time to get warmed up, start stretching out those trading muscles again. Coming all the way back up to the New York fair value gap, we'll most likely tap that, hit the 50, and then let's see what happens there if we push down and get that bearish confirmation, or if we tap into the blue zone itself. Ideally, we don't want to see price get above the blue zone. That's a lot of taps we already did. So with the blue zone, you tap it. We stay on the 5M for the first little while. You want to tap it, create a fair value gap on the 5M, come back up, tap that fair value gap, and then you can look for another 1 minute fair value gap to be created after we tap that. And then you can take that as your entry. And that's how you protect yourself. The more fair value gaps, the more rejection, the better. And again, that's all covered on the Learning Hub, fractaleffects.com. So we pretty much cover the three primary strategies on fractal effects. Scalping, we go over, we've actually added now swing trading to the back end, and the early entry model here. And just like the spotlight strategy, you can trade all three sessions, be it London, New York, Asia. The indicator will walk you through all of those. A little slow here to get up to the New York fair value gap. This is the difference between these two strategies too. With Spotlight, we have slower price action, so it gives us a minute to figure out our moves. With the early entry model, the blue indicator, things can move super fast depending on what kind of day it is. But this all happened within a matter of 5, 10, 15, 20, 25, 30, 35. Pretty much 45 minutes would have been in a trade setup. This is a deep, deep retracement for oil. I wouldn't have expected it to go past here. Let's see if we get a drop here. If we're going to tap the, most likely we'll tap the fair value gap, tap the 50, then we'll push down. All within this big fair value gap here. So even though majority of our strategies take place on the 5M, you can trade on the 15 or the 1. The indicator is adaptable for that. It'll still paint out the same areas. For example, here, I go to the 15M on NAS. If we have a fair value gap of interest, it will show us. So none there. Again, just a lot of back and forth. But if New York had painted a fair value gap, it would have showed up. Oil slowly dropping here. As mentioned before, for anybody who got in with the early entry, you should have taken your TP once you hit 3 and not look for a second entry. This is where most traders end up losing their profits by the end of the month. They'll take a trade, they'll make their 1 to 3, and then they see another trade set up. That's just getting greedy. Remember, you're only aiming for 3% every single day, risking 1% to make 3% every single day. And you don't have to get a trade setup every single day. You're technically looking for a good trade setup once a week. That's 12% at the end of the month. Because rarely you'll get an opportunity to make your 3% and then the market sets you up for another. With a deep retracement like this, I would not even mess with it. If you got your 12 or you got your 3%, you're good. Now, we can wait for a bearish confirmation. Since these are two different strategies and you missed the first one, that's fine. You can look for a trade setup during the actual spotlight strategy. Still just waiting for it to hit that 50, hit that New York fair value gap, and then figure out which way it wants to go. Pushing up further now into that New York fair value gap, into the 50. Let's see if it comes all the way back up to this fair value gap. That's not what we want to see. We don't want to see it come all the way back up here. Otherwise, it might give us a bullish confirmation. Just waiting and watching. Now this gave us a bearish confirmation. Pulled up. Tapped the 238. That could be making its extension, but again, too much sloppy price action. With the news, we're avoiding all the indices. Right at that 50, still taking its time. We want to bounce off this fair value gap, bounce off that 50, and then let's see if we get that bearish confirmation we're looking for. Still just stuck there. No other confirmation as of yet. Now we're getting some movement. In the 1 minute, we're still green. So we did get a couple of confirmations in GBP, NZD. Let's just take a look at that. We're waiting for oil. Oil looks like it's pushing down now. GBP, NZD. Got a bullish confirmation. Close to the 238. There's Asia. Looks like we have a downside expansion model. So we'll take a Fibonacci from Asia down to London. So we're sitting right at 61%, right under the 238. So even though we got a bullish confirmation, this is not a pair I'd be interested in. It's right at that golden zone where we could get a reversal. We're under the 238. I would have preferred to see a bearish confirmation. Aussie New Zealand also just confirmed. Let's check that out, see if that's a better setup. Again, a bullish confirmation. Similar setup. Downside expansion model. We've already taken out Asia highs. This one's at least looking a little better. We're above all the EMAs. Just wait for a retracement. Oil looks like it's slowly starting to push down. Since Aussie New Zealand already did a early retracement, I expect it to, let's see how it does in this fair value gap here. It's now our fair value gap of interest. Meanwhile, the 20 EMA slowly making its way up. Let's see if we get some kind of reaction in there. Oil still stuck at that New York fair value gap. I'd like to see the 1 minute turn red. Let's see where the 1 minute is. So 1 minute still sitting above the 50 EMA. I'd like to see it drop, cross those over. That'll give us an indication that this thing wants to slowly start pushing down now. And this is how the blue zone plays as confluence later during the spotlight strategy. If price action is sitting below the blue zone this late in the game, for it to now suddenly change its directional bias and become a bullish day, the probabilities are low. Doesn't mean that it can't, but the probabilities are decreased, and that's how we use this as another point of confluence. If we're sitting this low and we've already bounced off of it, could it come all the way back up? It could, but we'd ideally like to just stay below the New York fair value gap here. And continue pushing down, get that bearish confirmation, take out previous day's lows. Let's see how much of that gap we filled in. Pretty big gap. It's another target. Midpoint of that gap. Aussie New Zealand slowly pushing back down. Just waiting for that 1 minute and that bearish confirmation. Now for the blue zone indicator, keep in mind this is a dynamic indicator. This is not a time lagging indicator. This paints out zones following price action. Perfect example here, the New York manipulation. At New York Open, you're always going to see a manipulation move. These green lines right here, that outlines the range that you should see break. Could be a fair value gap in between. Obviously today was PPI, so it could have, like, it definitely left gaps in between, like a 15-minute fair value gap. That can also be a draw on liquidity. Remember, the market is either taking out liquidity or filling in inefficiency. So if it fills in a 15-minute fair value gap and then pushes in the opposite direction, that also counts as the New York manipulation move. Because it went in, filled in an inefficiency, and then it headed in the other direction, which is most likely what happened here. If we go to the 15-minute time frame, you can already just eyeball it and tell there's a 15-minute fair value gap right there. Let's just paint that out real quick. There you go. So that became the draw on liquidity. Then you drop back down to the 5M. So even though it painted out the range here, the market had already tapped this 15-minute fair value gap before pushing down. And again, this is all covered in the strategy. You want to for the early entry model, you want to match up all the confluence. You want to make sure you have your spotlight expansion models heading in the same direction as your buy sell models, as your daily candle bias, and then you want to use the New York manipulation move as the final nail in the coffin. You want it all to match up. If your directional bias is all bearish, downside expansion model, sell model, previous candle was bearish, then you want the market at New York open to sweep the highs right here. And again, this is a dynamic indicator, so it figures out the high and low of the specific range. It doesn't necessarily have to be here and here. It's not necessarily time-based. It just calculates the range that the New York manipulation will sweep. And today it swept to the downside, which was the fake move. Now the market's moving back up. This is why we proceed with caution. So since we swept out the lows, the market could come back up. That's why we want to see a bearish confirmation. Once you break twice to the same side, then your directional bias is pretty much set. But again, just this day, this week, we're going to probably see a lot of back and forth, a lot of gesticulation. So Aussie New Zealand crashed right through that fair value gap. We're back at the 20 EMA. Drop down to a lower time frame here. See if it gives us a foothold. I would have liked to see it sweep these lows. Like I said, I'd like to see Aussie New Zealand sweep out these lows and give us some indication that it wants to push up. Oil looks like it's heading back down. So we're at 11:07 Eastern Standard Time. Our goal is to be in a high probability trade setup 1 hour after the range formation, no later. As mentioned before with PPI, let's see if we actually get that set up, or if the market just continues to gesticulate. Not the best week, last 2 weeks in general. A lot of news dropped last week. Hopefully nobody was trading. Majority of professional traders are actually just slowly starting to trade now. I do know of some of our students that were trading through the holidays, and they were sending me screenshots. Now, if you choose to trade on days where we recommend you not to, it's probably not a good idea to be sending me screenshots of your trades. Now keep in mind, if you want to do this professionally, you can't be irresponsible. There's certain days you're supposed to avoid, certain assets you're supposed to avoid on those days. Other than like teaching, for example, and doing live setups mostly for educational purposes, I would not be trading today. This is even with oil. Oil is actually not an asset that I like to um, trade, because here I only have access through my current broker to Brent crude oil, which is actually, their spread is way too big. US oil, if you're trading US oil, that's fine. I just don't like having 2, 3 different brokers. We're having that move now. So anybody who got in on the early move, if you're still in this trade, which you shouldn't be, but if you are, now might be a good chance to get out and profit. Your 1 to 3 is right here, or your 1 to 3 passed like a couple of times. So you should have got in here on the early move with your stop loss at the top right there, right here. And your 1 to 3. So here's your second chance to make your 1 to 3 if you haven't already gotten out. As mentioned before, you should have got out here. At least moved your stop losses, taken out partials. I know most people are still aiming for previous day's lows. Now, once you have your 1 to 3, there's no point in getting greedy. Could it come back and, again, tap your target here of previous day's lows? Of course. But at the same time, some of this confluence doesn't match up. Our NYC manipulation move was to the downside. It's called a manipulation move for a reason. It could turn back around and head up. Even though that's not what we want to see, we want to stay below the blue zone. I'm just saying, do not take on any added risk if you don't have to. Excuse me, I'll be occasionally muting here to cough. Got a bad cold over the holidays. Just beginning to slowly feel better now. Okay, now we're red across the board. Aussie New Zealand still has not taken out those lows. Still below the fair value gap, which is not what we like to see. But oil, again, we're red across the board. We had a, sorry, just trying to remember if we have a downside expansion model here. So we have a downside expansion model. We have a sell model. We're below the blue. I want to see this thing give us a bearish confirmation. And then at least take out the second yellow line. That's our goal, that's our intention. We have about 15 minutes left to see if it heads in that direction. Aussie New Zealand, slowly making a move now. Let's see what this looks like on the 5M. we tap that 20 EMA. We're also finding rejection off the weekly range, the aqua line. We're sitting right in it. We do have a fair value gap on the 1M. I would have felt more comfortable if it had taken out this low and then gave us a fair value gap. I just don't like this price action. Too many equal relative lows here. Could just sweep that again and then push up. Because right now, if we went in for a trade, this would be our stop loss. The green line. I like to see it sweep it. But it is finding support off of this fair value gap here. Yeah, since this is not an asset I trade on a regular, I prefer to see it come back down and take out these lows. Again, if it pushes from here, that's fine. Just looks a little too clean. Excuse me, I'm just going to grab some water. So Aussie, New Zealand, now finding some support off this fair value gap, but it's not a trade I'm interested in. I would have liked to seen it take out those lows. Rarely does a market come down this far and not take out any lows here. Makes more sense for it to take out these lows, tap this fair value gap, and then push up. So we'll keep an eye on this, but again, I'm not interested. Oil, now bouncing off the 20 EMA again. I want to see this thing push down. So far, a bit of a sloppy day. Just checking if we even hit that 20 EMA. So oil back at that 20. Pushing back up, heading back up to the 50. Let's see. Still no confirmation. Oil, making one more move for the 50. Checking if we have a fair value gap in here. No. Aussie New Zealand came back and tapped that fair value gap. Yeah, both these markets just stuck here. Aussie New Zealand looks like it's pushing. Just not happy there though. I would have liked to seen it take out these lows before pushing up. Oil looks like it's losing gas. I'd like to see it just drop from here. We got 8 minutes left though. Oil playing both sides now. People going long from this fair value gap. People going short. All this EMA rejection in the NYC fair value gap. They're just engineering new liquidity. Aussie, New Zealand. Making another try. Let's see if it does actually take out these lows. About 5 minutes left. Oil finally starting to push. Let's see if it continues.